Hello traders and welcome to ChrisFX. It has come to my awareness that many of you are struggling to find which time frame is gonna act as your higher time frame, such as let's say the daily time frame, and which time frame should be your entry time frame. And of course, those are all things that I'm teaching in the mentoring and in the academy, but I believe also those people who cannot afford it, they have to have access to this information because it is a life changer. So I'm gonna start by telling you which time frames I think are the most important time frames to combine. And then we're gonna be showing some examples in this channel, ChrisFX, but then I also want you to go to my other channel, the SMC Trader, to check out even more examples because this is something that is gonna help you a lot. Let's begin with our video. And here, first of all, I'm gonna give you the combinations of the time frames which I believe are the best combinations to trade. You can go ahead and trade from the daily, identify your daily, let's say, FEG. Let's talk about fair value gaps. Okay, because I'm gonna show fair value gaps. Identify the fair value gap on, let's type it down like that, identify FEG on the 1 day here on the daily time frame, and then entry, and we're gonna place the time frames right there. Let's go ahead now and do that. So identify FEG on the 1 day right here, and you can trade then, you can scale down to the 15-minute time frame within the daily FEG that you have identified. This is the best combination if you want to go from the daily. The 15-minute then is gonna be your best bet, guys. Absolutely your best bet. Now, what else you can do? You can do the 4-hour with the 15-minute as well, or the 4-hour with the 5-minute. Okay. Now in the premium, I'm teaching in the first case scenario, such as this one, the daily time frame with the 15-minute. Many times I'm also scaling down even to the 5 or the 1 minute, but this is something totally different and belonging only to the premium. So there you go. For the moment we have those. Then you can go ahead and say, many people are saying go ahead from the hourly time frame and go to the 5-minute time frame. This is absolutely mistaken. You should not be doing that unless you have a strategy which is a winning strategy. Then do however you wanna do. I would suggest from the 1 hour time frame, you should go, in my opinion, down to the 3-minute or the 1 minute time frame, or a combination of those two. Now, I have to mention that there are also other time frames that can be combined. Maybe you are a swing trader who wants to go from the monthly to, this doesn't mean necessarily that only that is identified as a swing trader or swing trading, but maybe you want to identify areas from the monthly and enter on the daily or the weekly or whatever you want to do. So those are also combinations. And of course, if you are a micro scalper, you could go for 1 minute time frame or 5-minute time frame and get entries in the, let's say, 15-second time frame. I do not trade like that, and I do not suggest that as well. Those are the best combinations that I have identified right here. Remember those combinations. So you will be identifying your FEGs on the daily and then entering on the 15-minute or on the 4-hour, and you will be entering on the 15-minute again or the 5-minute. Or if you identify your FEG on the 1 hour time frame, then you can enter on the 3-minute and the 1 minute time frames. Now what I'm gonna be doing, I'm gonna be giving you 2 examples. They could be 2 examples from the daily and the 15-minute, or 2 different examples, and then I want you to go to my other channel, the SMC Trader, and go ahead and check more examples on those very same time frames that I have identified exactly right here. So I'm gonna be deleting that, and now I'm gonna go to the daily time frame in combination with the 15-minute time frame. Okay, there are of course a bunch of examples. I'm trying to find a nice example. Maybe this one is gonna do it right here. So let's start from this example right here, guys. Here I am on the daily time frame. What do I have here? I have, generally speaking, an upwards momentum. This huge last leg, let's call this one. Of course, this is a last leg, but this whole thing is another leg from the weekly. I have an upwards momentum. And what I can do in this occasion, I can go ahead and identify my fair value gap, which is of course this area right here. And then I can wait for price to get back into my area. Now, what did we say? We said from the daily we go and enter on the 15-minute time frame. So once I enter my area, I will go ahead and scale down to the 15-minute time frame right here. And I will be waiting to see some form of change of character first. Okay, this is marginally doing it, and I'm teaching all of those things in the premium, how you can avoid all of those moves. I'm pretty sure you would have entered here, and then you would have entered here again, and you would have been thrown out of your trades. And maybe this is not the best example, but maybe it is at the same time, because here you can see the impulsive movement. And you can go ahead, either take your trade as it is with a stop loss. You can leave a couple of pips even, okay, below it. It is swing trading, this one, or you can just place a very tight stop loss, because if price is not gonna come back, it's not gonna come back. Or you can place your pending order from a fair value gap, such as this fair value gap right here. Let's see which of those would have been activated. Even this fair value gap would have activated you into the trade. Okay, and let's see how this would be playing out, guys. Let's suppose that you are targeting this liquidity all the way up here for a 4.5 to 1 reward to risk. It is easily hit, as you can see. It took though from here where you got activated until you hit your target 1 day and 2 hours. And if you would be going for this area, even up here, this would give you almost a 7 to 1 reward to risk. This was also hit, guys. So this is a beautiful combination of time frames. Okay, the daily with the 15-minute, and I would love to go ahead and show you yet another example from the daily FVG and the 15-minute as well. So as I can see, probably we have an example. This would be probably a losing example, and this could be a winning example. I'm trying to find a beautiful example because I want to show you mostly how this thing works. So I am cherry picking here, absolutely. I'm trying to find, I can go ahead actually and show you examples from the trades that we have taken in the signals group, but I want to go ahead and check out if we have another beautiful example. I'm looking for FVGs all the way up here. Here there was an FVG, we missed it, guys. There you go. Here there was a daily FVG. This one right here. Okay, we are retracing back into the area, scaling down to the 15-minute time frame. This is not the best example because here the manipulation happened already, and it happened exactly right here. I remember this example. I didn't take this trade, but you could be taking probably a trade from this area right here. Okay, or for those of you who would have identified this wick as an order block and you would have placed your pending order right here, this would have been your trade exactly as you see it over here. Let's see. Yeah, eventually you would have hit your target, or if we forget about this scenario, you could be entering after this displacement, which I don't like at all. I don't like this example at all. But let's say that you would be wanting to enter from every single area that you see. This would have been your trade from this FVG on the 15-minute time frame. And if you would like to go for all the way down for this liquidity, then your trade would look exactly like that, guys. There you go. And of course the trade ran for way more than that. We cannot know that, of course. You could be going for this liquidity even down here. So those were two examples using the daily fair value gap with the 15-minute entry. Now I'm gonna go ahead and show you an example using the 4-hour fair value gap and a 15 or a 5-minute entry. And here we are on the 4-hour time frame. Let's go ahead and find an example right here, and I can see an example already, which is this example over here. We see that our last leg, which is this leg, has been bearish nonetheless. We can go ahead and identify this 4-hour fair value gap or the remaining part of the fair value gap, which is this fair value gap right here. Of course, we know that above it we have yet another fair value gap. What I want you to do is now scale down to the 5-minute time frame. This would not be enough for me as a price action in order to enter a trade, but for those more impulsive, let's say, traders who entered from here, then they would be in the trade, but I wouldn't have entered from here. Nonetheless, a point where I would maybe enter from would be this point right here with a stop loss all the way above. So if I move forward still on the 15-minute time frame, there you go, we are into this trade with my style, let's say, of trading. And if we would go for this area all the way down here, then this would give us a 3.321 reward to risk. Let's see if we hit it. We did hit it, but did we get stopped out? No, we didn't. We are still in the trade, and we did indeed win the trade. Now let's see for how long this played out. If I go to the 15-minute, okay, this went up to, let's see, even up to an 8.5 to 1 reward to risk. Of course, you cannot know that. You can either go for this area or this area over here. These are the correct, let's say, areas to go for. I wouldn't risk it to go all the way down here, because then we have FUGs from the 15-minute time frame, which might be very strong for buys down here. But this 4.5 to 1 reward to risk, or even this smaller 3.3 to 1, are super realistic targets. And remember, this trade we took on the 5-minute, 4-hour FUG with the 5-minute, and this right here was an order block, guys. Okay, so from the 4-hour FUG, we went ahead, we identified the fair value gap, we waited for price to get back into the FUG, we scaled down to the 5-minute time frame, we identified an order block, we stretched that, extended that all the way to the right, we got activated in the trade, and then we targeted areas of liquidity such as this area right here. Now, what I want from you, again guys, first of all, of course, go ahead and enroll in my exceptional services. They're absolutely the best in the market and the most realistic. I'm not only teaching you strategies, because without a strategy you're going nowhere. I'm also a very humble trader who is not getting excited when he wins, and I'm not also getting sad, let's say, when I'm losing trades. I know that trading is a long-term game. Whoever does not understand this thing will have a major problem, and he or she is gonna find it impossible, almost impossible at least, to make any profits in the long run, in the long term, in other words. And then after you have enrolled in any of my exceptional services, I want you to go ahead to my other channel, the SMC Trader, and check out more examples based on this exact thing that I'm teaching you right here. Especially in the other channel, I'm gonna focus on the 1 hour with the 3-minute or the 1-minute entry. So let's say that on this video on ChrisFX, we showed some examples from the daily and the 15-minute and the 4-hour and the 15 or 5-minute we showed specifically. And on the other channel, the SMC Trader, I'm gonna show mainly examples where we will be identifying a 1 hour fair value gap, and we will be entering on the 3-minute or the 1-minute. So this is gonna do it for today, traders, and thank you all for watching. Until next time.